Has your family been taken by a corporate mascot? Were you extorted by an enormous green owl? Have you been physically or emotionally injured by Duolingo?
Two choices, Spanish or vanish. Amo la carne humana, amo y famish. Spanish or vanish.
Oh my god, hi, it's Duo. I'm sick of kidnapping families for now. Come with me to surprise a learner.
Konnichiwa.
Konnichiwa.
Hi, Duo again. You missed your Korean lesson. Know what happens now?
눈물이 흘러내려가 이젠 끝난 것 같아.
Big bag, big bag, big bag, big bag. Yeah, my bag is loaded up with snacks and different.
So if you didn't know, Duolingo is by far the most popular language learning app in the world, with about 7 times more users than the next most popular language app, and they offer music, math, and chess lessons now. And as you saw in the intro, they also have one of the most effective marketing teams in the world, and a surprisingly high pop culture presence for an education app. Duolingo stock has dropped about 30% in the past month, creating the start of another great buying opportunity that I have been waiting for. Duolingo runs on a freemium business model. It's completely free and supported by ads, making it accessible to millions worldwide. But around 80% of Duolingo's revenue comes from subscriptions, while only about 8% of users are subscribers paying for the premium experience. That small group drives the majority of the company's income by opting for an ad-free experience, offline access, and advanced learning features. Duolingo's recent dip doesn't appear to be driven by any major negative catalyst. Instead, it looks like a natural pullback, largely due to its previously high valuation and the gradual slowdown in growth that's typical for a company entering a more mature phase. Despite the recent pullback, Duolingo's growth remains incredibly impressive. It's still one of the fastest growing companies in the market, consistently posting annual revenue growth of around 40%, which is among the highest you'll find anywhere in the market. And the company has been consistently profitable by net income for about 2 years now. As a software and subscription-based company, Duolingo of course has high gross margins around 70% and decent net margins around 15%. Duolingo is also expecting to more than double their earnings per share every 2 years for the next few years, which is also one of the highest earnings per share growth rates you can find. All of this amazing growth has given the company a premium valuation with the trailing PE ratio of about 200. This valuation is high, but for a company growing this fast, it's what I'd expect, which is why I have been wanting to accumulate shares, but only during dips like the one we're at now. Currently close to a 30% correction, Duolingo stock looks like it could be creating a local bottom soon. It's close to this 200-day moving average, which it might bounce off of, at around the $360 to $380 price area. And if that moving average doesn't hold, then the next strong support level will be at this 1.6 fib level, at around $295. This 1.6 fib zone would also create a double bottom with this previous low from earlier this year, and it would also align with these highs around 1 to 2 years ago, around $250. So what I'll be doing is placing limit orders starting at around $400 where we're at now to make sure I get a decent amount of shares because I don't currently have a strong position in the stock. And I'll have limit orders every $5 of price movement all the way down to 300 at the 1.6 level, which seems like it would be the strongest support level. And if it gets close to that $300 level, I'll add more orders all the way down to about $245, just in case it gets that low. But I don't expect it to get much lower than $300 considering the extremely fast growth rate of the company, and since that would create a double bottom at the 1.6 fib level. In terms of how high Duolingo can go in the future, I would definitely expect the stock to surpass this fib retracement in the next 5 years, which would be close to a double. But I also think you can compare Duolingo to some of the other most successful subscription-based platforms, like Spotify and Netflix. Netflix has a market cap of over $500 billion, and Spotify has a market cap of about $150 billion. Now, I don't think education is going to be as popular as entertainment like Spotify, so I don't expect Duolingo to reach Spotify's $150 billion market cap in the near future, but it does tell me that Duolingo's current market cap of $18 billion could get close to a $100 billion market cap sometime in the next 5 to 10 years, which would make Duolingo stock seem like a pretty safe 5x return within the next 5 to 10 years, which would be a much better return than the overall market can give you. Now, to try and get a better idea of where the stock can go in the next 5 years, you could put a fib retracement over the previous high and low from the past year, which would put the highest fib level at around $1,000, which would be an obvious psychological level and would put Duolingo's market cap at about $55 billion, which, when comparing to Spotify and considering Duolingo's extremely high growth rate, seems very doable within the next 5 years. So if the stock can get down to around that $300 level and fill almost all of my limit orders, giving me an average buy price of around $330 to $350, then I think I could be pretty confident in getting a 3x return within the next 5 years, as the stock gets close to that $1,000 price. But I think this 3x return in 5 years would just be my base case, and since the company is growing so fast, I wouldn't be surprised if the stock exceeds these expectations.